Hello and welcome to another update video about Solana. So the Solana chart shows a reaction to that support region. We covered Solana, I think late yesterday in a video, and it was a very busy day yesterday. So we have to be on our toes here. The situation is very dynamic. Overall, I mean, we've had a dip into the support area, very quick again. Lots of emotions in the market, lots of leverage being kicked out. But eventually, I mean, essentially, we are back at the same price level. So you could say, if you watched the video yesterday around the same time, probably nothing happened. But we obviously were watching yesterday for a bit of a break there to the upside of the triangle. Triangles typically the second to last wave or structure of a cycle. So that told us that, yeah, ideally one more high and then the dip into the support region. That actually happened. So we had that dip into the support region very fast again. Okay, we don't seem to get the luxury of corrections that take a little bit of time to slowly accumulate. I think that market is over at the moment. It's crazy, and it keeps us on our toes. Definitely just make sure that you don't get emotional whatever you're doing. That is very important in the current market environment in which a lot of influencers try to stir your emotions. Just be careful about that. It's just a well-meant warning, because yeah, just make sure you know who you listen to, because trading already means that you are very emotional. Yeah, you have to fight your emotions. If you then watch certain channels and they try to get you to FOMO or something, just be a bit careful with that. And just as long as you know about it, it's all good. But anyway, we've had a dip into the support region. That was communicated. The additional high was communicated. And now this thing is, has anything changed? I don't think anything has changed. We still have a structure that follows our main thesis, that the wave 4, the larger degree, finished on the 23rd of January there, that we could be in this move to the upside at the moment so that wave 4, yeah, finished on 23rd of January. We're now in the wave 5, could target $190 plus. The idea of a wave 5 to the upside, yeah, you know about that. But that means that the move up can be sort of corrective in nature. We might see that at the moment, given that the structures are, well, they look corrective. So we have in the yellow count an ending diagonal. And this dip might have been a fourth wave pullback. And we could now be starting our fifth wave to the upside. That's just one scenario I'm tracking. The other scenario is a little bit more bullish in the short term, and it's an ABC structure. That's just it's just a different overall assumption. Both are valid assumptions, and both are actually sharing sort of the same, yeah, let's say, target. Yeah, the yellow count might not quite reach the 190. Orange probably would do, maybe even a little bit higher than that. And both, however, were sharing the same or a similar support area. So I sort of combined the two support areas in one. And we should get to 190 as long as we're holding 106. So that's pretty much still the condition I mentioned yesterday. Only a break below this support area would mean I have to reinterpret the chart. A break below 106 does not mean we have to, well, doesn't mean we have to change the chart, because the invalidation point is down there at around 98.50. But it means that it's worth looking at it, because typically, yeah, 90% of setups or structures fail if the price breaks below the 78.6 retracement on a sustained basis. Then we typically get invalidation. But the formal invalidation point for both structures is down there at 98.50. And then obviously the next invalidation point is down there at around, yeah, $79 here, that fourth wave low. The thing is, though, if we come down that much, if the structure here breaks, orange and yellow, it's going to be difficult to uphold the idea that we could be in this fifth wave to the upside. We will then have to reassess basically, yeah, the structure. So far, yeah, no real change overall here to the structure. The fifth wave could be unfolding there right now. Fifth wave should reach, as I said, 190. If we look at the sort of the microstructures, we can say that in the orange count, the third wave to the upside of wave C should be next, or the fifth wave. Again, they share similar targets as well. Specifically looking at the third wave in orange, we should reach minimally $174, because measured against here, the length of the wave 1, and we go to the low of the wave 2, Fibonacci extensions typically tell us the target for a third wave, and the minimum target I normally want to see or to trust the structure it's the 1.236 extension at $174. Ideal target, 183.60, possibly higher. Yeah. Higher is always possible. But that very well matches my overall target of 190. In the yellow count, yeah, I mean, it might not stretch that much. Here, the third wave did reach the ideal target, the 1.38. So looking then at the fifth wave to the upside, I just need to mention that in the fifth wave to the upside, we might only reach, let me add the 1.618 extension. Where are we? Don't see it. If not, I will have, it's already, 1.786, I mean. Yeah, it's probably somewhere, I just don't see it. 1.786, that's the next level, and the 200% extension. So then we talk about 161, 170, so maybe in the yellow count we might not get that high. Just please consider that. It is impossible, in my opinion, to distinguish between orange and yellow. I'd be leaning towards orange at the moment, the way it's going, but yeah, that can still change. Yeah, that's my update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.